Welcome to another stock market update. I was having a little difficulty coming up with a title for this video. So I asked myself, well, what has this market been doing? I said, well, it's basically just making new weekly high for the last few weeks, so it hasn't done much of anything different. So I said, yeah, the market seems to like doing the same old, same old. So that's how I came up with the title. I know it's not very creative. But basically, the market has been doing the same old, same old. It's basically been doing the same thing for the last few weeks, right? It put in a new weekly high, and it's like there's nothing in the world is bothering the market. Even though the coronavirus is still seems to be unabated, more people is still getting infected, and more people are dying from it. The market doesn't care, it seems like. It just make a new all-time high and just go about like there's nothing in the world that is bothering it. And then also look at Tesla. Right? Tesla announced a secondary offering of $2 billion last week after a few weeks ago when an analyst asked Elon, is Tesla going to raise money? And he said, no, we got enough money. We don't need to raise any money. And when Tesla announced a secondary offering last week at a price that is $767 a share, which is somewhere around 5% less than the current price, the stock went up. Typically, when a company announces a secondary offering, the stock is slammed a bit. But no, Tesla continued to go up. So the market is acting irrational because the market is being pumped by the liquidity that the Fed is putting in, and also China is pumping a lot of liquidity into the market because of the coronavirus. And we know what will happen when the liquidity dries up. And one day this market is going to come crashing down. So is the market preparing to crash down, or is it continuing to make new high? We're going to take a look at the stock market indexes and the stock market indicator to see what the market is telling us. But before we do that, I'd like to ask you to help me smash that YouTube algorithm by clicking the thumbs up and click on the subscribe if you'd like to see more of these videos. And you have any comments, suggestion, or question, post them in the comment section below and I will try to answer them as soon as possible. Let's go take a look at the stock market and see what it's telling us. Let's start with the index chart here. We are looking at the major market index on this chart here. And if you notice that the same indexes are hitting new high last week on Thursday, the Dow Jones Industrial, the S&P 500, the NASDAQ 100, and the NASDAQ Composite. And the same indexes that are not participating is the New York Stock Exchange Composite, the Dow Jones Transportation, and the Russell 2000. So you can see that the market is being pushed up most likely by the large cap tech stock, because the broader market indexes like the New York Stock Exchange Composite is not making new high, and the transportation is not providing the Dow theory confirmation with the Dow Jones Industrial when it makes a new high. And also the small cap is not participating because it is not making a new high. And looking at the sentiment chart here, and first is notice that the put-call ratio, the put-call ratio actually was down at 0.55 earlier in the week. Right now it's creeping back up to above the 0.75. And going to be watching this in the coming days to see if this continue to come up, because I think some people will start putting some hedge on and buying some protection. Although the fix is still not elevated yet, it's sitting at 13.68. So we'll keep an eye on that as the put-call ratio comes up, or otherwise, if the market turn bullish again and rally back up to a new all-time high, then we most likely will see the put-call ratio come back down and the fixes continue to fall. And we might even see it to come back down to the 12 level. And here looking at the S&P 500, you see that the S&P 500 is making a new high last week, with the cumulative advanced decline also making a higher high. So we got a confirmation here. And if we look at the new high, new low, that is not the case, because we see that the index is making a new high here, but the new high, new low is actually making a lower high. Although it is positive, it's finished off the week at on Friday with 208. So there is more new high than new low. Looking at the NASDAQ 100, as it making new high, the cumulative AD line is making a lower low, and that's a negative divergence. As the index making new high, you see that the new high, new low is actually putting a lower high. And then looking at the S&P 500 cash index, we could see that the cash index seems like you want to come up to this 3414 area, and that is the 2x of that move, this swing here. Okay, and right now it seems like there's a confluence here on this major move, this symmetry move here. Okay, and it is getting up to this 78.6 or close to the 80% level, which is 3424. Also, the other thing is I have a Fibonacci retracement here between the swing, and you see it pull back into this retracement zone and then bounces it back up. And there is a 127 at 3410. So you can see that these three levels here is pretty much in confluence with each other. So just keep an eye on that 3400. I think that 3400 is going to get tagged. And then we'll see these 3410, 3414, 3424 will be in play because of these confluence up here. And looking at the U.S. dollar, remember we were saying that the U.S. dollar kind of bounced off of this trend line is coming up. So right now it seems like it's want to try to get up to this 99.40 or 99.50, and wouldn't be surprised to see it hit this century mark at 100. Here looking at crude oil, it booked below this zone here, and right now sneaking back up here. So I think if it's going to be a look below and fail type of move, then there's a good possibility that it could move back up to this, at least to this 60 area. And if one is taking a long trade up here, putting a stop down here, that might present a nice R&R if it turn out to be moving up. So basically it's a right out type of trade. Right? If you get in and come back down, take the stop and take a hit. But if it turns out that it's just going to trend up, then this reward and risk ratio is going to be very favorable. And finally, you're looking at gold. Remember, we were talking about gold staying up above this pivot point, and this weekly chart here certainly indicating that it's trying to hold above this level of 1566.20. So gold is still maintain that it's going to be a bullish move on the long term. So right now, we're essentially looking at this major move, monitoring this major move, this getting up here to 1743. So the market is still telling us there's going to be a new high coming, because with multiple indexes hitting new high, it is not topping out yet. We basically have to see the strength of the market come down and get to the point that it is just hanging by a string, then just a little yank, then things just fall off. So for now, we're basically just going to be a little cautious, leaning on the upside, because the market is still going to have some more upside to come. Not saying that in the coming days or the coming week that we won't see a little bit more pullback. The market have a tendency to fool us most of the time, right? We think the market gonna set it up for us to think that we know what it's gonna do. So by doing something consistently for a period of time, it conditions us to act that way and expect it to repeat it over and over again. Then once we start behaving that way, then the market will suddenly snap and do something that is unexpected. Then that's how the market will slap us for not paying attention. So for now, just be a little cautious, and there are more upside to come, but that doesn't mean that we won't see a little bit of a pullback before the further upside occurs. But of course, there's always a possibility that it's just continue on up. The market is, it's going to do what it's going to do. We basically just have to pay attention to what it's trying to do and be prepared. So I hope you find this video useful and informative. And if you do, give it a thumbs up and help me smash that YouTube algorithm. And also click the subscribe if you'd like to see more of these videos. So thank you for watching and good luck on your trading.